Good afternoon, it's the 18th of March 2020 and we're here to have a quick discussion about the current coronavirus situation and what it means for businesses. My name is Jamie, I'm a tax associate at Gerald Thomas.
I'm Simon from Gerald Thomas Wealth Management.
And I'm Chris, an associate in the accountancy and business advisory side of the firm.
A couple of things we're going to look at today. We're going to look at what government support is available, what funding is available, how to create business continuity. We're going to look at financial markets, and then finally we're going to look at a few opportunities. Now, if we go straight into the government support and funding side of it, Chris, I know you've been looking at the loans, particularly what was being announced over the last couple of days. So can you fill us in a bit on that?
Yeah, during the budget it was announced that the coronavirus interruption loan was being introduced. It works very similar to the Enterprise Finance Guarantee scheme, which was previously in place. And it's now a scheme that's been expanded from 1.2 million to 5 million and is now backed by an interest waiver for the first 6 months.
And what kind of businesses are going to be eligible for this?
To be eligible, this business is going to be based in the UK. The annual turnover can exceed 41 million and operates within an eligible sector. It's going to have a sound borrowing proposal, but basically it doesn't have, it has insufficient security to meet the lender's normal proposal.
All right, okay. And how do businesses go about accessing this?
They're going to speak to the normal lenders basically, and if there's any doubt, then the lender they would look for this backup scheme provided by the government.
Do we know when they're going to be available from?
The final details are to be announced, but it's going to be pretty soon.
Okay, and we've heard quite a lot about it being secured up to 80% by the government.
That's
so
correct.
What does that mean in layman's terms?
Again, you know, if there's from the lender's perspective, it gives that element of security to them. So again, if the business hasn't got a sound lender proposal, it's got a sound borrowing proposal, but it's got insufficient security, then the government will back it up to the 80% then of the lend.
Right, okay. So that covers the loans for small and medium-sized enterprises, but what about larger businesses?
There's going to be an announcement by the Bank of England for the support that they're going to give to larger businesses. And again, there's over 3.5 billion in additional funding, which has been devolved to Scotland, Wales and Northern Ireland.
Yeah, and that sort of brings us on to the business rate relief and the grant funding. The Welsh Government have said they're going to include the proposals that were in last week's budget. So there's going to be particular reliefs for certain businesses in the retail, leisure, hospitality sector and in the pub sector as well. They also said that any business who qualifies for small business rate relief would be then eligible for further funding. We're not sure yet when that's going to come in because the councils aren't fully sure yet.
How about the announcements yesterday?
Yeah, so the Chancellor yesterday actually extended those proposals. So effectively provided a further 25 grand of grants to retail, hospitality and leisure businesses with a rateable value of over 15,000 and below 51,000. And there's further grant funding up to £10,000 worth of grant for any business which qualifies for small business rate relief. However, rates and business rates are a devolved issue, so the Welsh Government are going to have to pick up on those proposals and let businesses and the councils who are going to administer them know whether they're going to implement the same rules in Wales.
How can they get their hands on it?
So this will be in speaking to your local council and their business rates department. I've actually phoned a couple of the local ones today. They know as much as we do in terms of the actual implementation of things, but this was one piece of advice that one of the councils gave me, is that at the moment a lot of the business rates bills are going out to cover 2020, 2021, and a lot of people will be paying will have payments due in April and May. Now, if you are one of the sectors that qualifies under these new rules, what you might be able to do is actually form the business rates team, and even though those proposals haven't trickled through yet, they might understand that they will, so therefore they might allow you to not pay your April and May bills. And sort of talking about these grants and loans, it's all great in theory, but I suppose as we were talking earlier, Chris, this means that forecasting is now sort of more important than ever.
Absolutely, yeah. And it's always tricky putting together forecasts, and in times of kind of the certainty that we are in, it makes it trickier again. But it just kind of goes that the importance around forecasting and strong kind of controls of your finances, knowing where you are, where you're heading, it certainly is paramount in these times, really.
Yeah, I suppose that if you are going to go for one of these business interruption loans, knowing now when you're going to run out of cash to pay your overheads or your employees is important now, because then you can plan ahead so that those gaps are filled.
Exactly, and even there is this loan facility or this guaranteed facility in place, the lenders still want to know how you're going to repay these loans. Even though there's a government-backed scheme in place, you still need to kind of know when, if you're able to repay these loans back. So again, forecasting is so important at this time to understand the likelihood of repaying the loans, and when you're going to pay them, and what bottlenecks, and again, to help you get through these tough, uncertain times. At least again, it's a mechanism to try and help and assist with the longevity of the business.
Yeah, absolutely, and I know that a lot of businesses, certainly some of the questions we've been asked here, do surround employees and downturn in sales, meaning that sometimes the employees, there won't be enough work to go around. What I would say with that is, if you've got a HR advisor or employment lawyer, you do speak to those guys. ACAS is a free advice line, which it will give you independent advice. And any of our clients actually have access to a Corona Eye HR helpline, and if you do need those numbers, just let us know and we can forward you onto the right numbers. In terms of employees as well, obviously the statutory sick pay is now in from day one, and it will actually be refunded to the employer by HMRC, whereas before the coronavirus hit, that was actually, the statutory sick pay was funded by the business itself. We're not 100% sure yet. HMRC and the government are working on systems to be able to get those repayments in as soon as possible, and we're sort of hoping it'll go that way rather than offsetting against PAYE, because cash is key at the moment. And sort of moving on to look at individual issues. Obviously the stock markets have been affected by coronavirus. So Simon, can you let us know a little bit more about that?
Yeah, I mean, this is important to us because we look after clients' pension funds, their ISAs, their general investments, and what's happening now, well, it'd be foolish to say anything other than it's quite severe. 12th of March saw the biggest fall on the FTSE 100 index of British stocks in its history. If we look at how stock markets around the world have been affected, just going back to the start of this year, I've got the figures here. We've got the FTSE 100 down 33%. We've got the Dow Jones in America down 26%. The Nikkei in Japan down 28%. The DAX in Germany this morning is down 36% from the start of the year. I think what is most sobering of all, I don't want to be all doom and gloom, but the VIX, which is the Chicago Options Exchange Volatility Index, sometimes known as the fear gauge. Now, basically, this it analyzes and predicts expected volatility in markets based on what's happening on the Standard & Poor's 500 index. In other words, how much do they think the markets are going to go up and down in value over the coming 30 days? Now, I would stress that these are predictions on this index, not actual facts, and they do get it wrong quite often. But the simple fact is, in January, the VIX was predicting volatility of 12% over the next 30 days. This morning, that figure is 76%. So it's ramping things up quite dramatically.
Okay.
So,
and off the back of that, what should we be doing? What should people be doing to address the current situation?
well, I think the way to look at this is the way that we have addressed this in, shall we say, normal investment times, as if you can call anything normal in the last few years. First of all, when we take on new clients, they go through a fairly rigorous risk tolerance and capacity for loss profiling exercise to make sure that if we make new investment recommendations, the level of risk that we put clients into is commensurate with what they're comfortable with, what they can tolerate. We obviously review clients' investments on a regular basis. And what we've done over the last couple of years is we've reviewed with a view to, should we say, substantially enhancing diversification to make sure that clients' investments are spread out over a large number of geographic areas and sector types. Having said that, of course, when you come across some of the figures I've just been looking at now, the geographic allocation is not going to help tremendously. With the normal run of things, it would make a big difference, also over different asset classes. Now, what we did in anticipation of the coronavirus pandemic was to contact clients who we thought were, should we say, most psychologically vulnerable, or who were closest to the time when they're going to need access to their investments, to say, look, we do have access to investments which hold cash and money market instruments. Do you want us to change? We just want you to know that the option to make those changes are there if you want them. So normally we would say keep calm and carry on, but I think in this particular situation, which is unlike anything else, we do need to alert clients to the options of a temporary safe haven in cash if they want it. So,
And how are clients reacting to this?
well, we tend to hold most client investments on three main investment platforms, amongst other investments. But amongst those three platforms, we've got something like £14 million of assets under management. And following our alerting clients to the option to go into cash if they wanted to, albeit as a temporary measure, we've got well over £6 million temporarily switched into cash, with I suspect a possibility of more clients coming forward to say, let's think about this again. The other issue, of course, is that where we're investing any new client money, because believe it or not, clients are still investing right now. We're either going temporarily into cash holdings, or we're drip feeding into the market via phased investments over 3 months or 6 months. So,
All right, thank you for that, Simon. And I suppose I know today we've been talking about the potential issues that firms will face, that businesses will face, and what support packages there are available. But let's not lose sight of the fact that when things like this have happened in the past, yes, this is slightly unprecedented, but when we've had economic turndowns in the past, businesses will come out of these stronger. This is a time to sort of look at your service offering, and if your service offering, your product offering is affected by the current situation in coronavirus, is there a way it can be flexed in any way or changed slightly to get around the current situation? So if you've got a restaurant, a cafe, can you be doing home deliveries? I've been seeing a lot of that with my local cafes and restaurants in my local area, sending out things on Facebook. If you've got a farm where you're selling, you've got milk and eggs and butter and things like that, it's local deliveries. If you've got a car garage, can you do pickups and drop-offs with MOTs? If you've got a dog walking business, can you make sure that the dogs are walked and kept in an isolated area when you go into the house? So let's look at the positive side of things. It's also a time, I think, especially with office workers, if you're a lot of people are working from home, it's a time to really reassure your processes and systems and make things as efficient as possible, so that when this is all over and everyone is working back to normal in the offices, you've got those as a positive outcome from the downturn then, because those processes can carry on into the future. We'll be hopefully doing more of these as things progress and as major changes come up. We'll try and keep everyone informed as much as we can. So thanks for listening.